All right, Weston, if you want, we can probably get started. It seems like most of everybody has joined here, so I'll let you kind of get it going.
Awesome. Cool. Yeah, appreciate it. Thank you, David. Thank you everyone for being here today. Walker Reed's got something special for you guys today in store. Excited to have this webinar. Today we're going to be discussing the maximization of energy tax incentive and energy engineering services across key industries, with a bit of a focus on actual, real world case studies, as it's just kind of easier to demonstrate our approach and the value we bring to our clients through case studies itself. I'm Weston Lustig. I'm Director of Growth and Business Development here at Walker Reid Strategies. I'm joined by David Diaz, as you guys saw, probably the typical face everyone sees. He's the managing partner and founder here at Walker Reid. He had me join him today. I think, he let me know he thinks folks might be getting tired of just the David monologue. So I'm happy to be here, excited to be here, and get things going. So, excuse me. Just
Figured it's always a good opportunity for some people to meet some of the fresh young faces here at Walker Reed that are make the world actually go around. So
Yeah, of course. Thank you, David. Thank you. Yeah, and appreciate the opportunity to be here with you all today. Agenda, we'll give a little bit of background on Walker Reed. I know we have probably a number of folks that are very familiar with our webinar series here, but others that are not, I just want to give a little background on us, and then we'll do a high-level service overview. We'll walk a bit deeper into some of our tax incentive services, and then swing on the other side of things on kind of the basis of our business, which is the energy engineering offerings that we have. And then, once I finish up with that, I'll pass it over to David. We're going to dive into some case studies. So a little background on us. We're Walker Reid. We like to think of ourselves as a leader in the, niche of energy engineering and tax incentive space. Our focus is obviously in maximizing incentives and compliance for commercial and industrial building owner clients. We specialize specifically in Section 179D and 45L tax incentives. We also do quite a bit of ITC studies and consulting. We also, on the other side of our business, on the energy engineering side, do whole building modeling, lead modeling, IGAs, M&V, etc. We've been doing this since 2010, which is quite some time, about 15 years, one of the early entrants into the space. And to date, we've done over 50,000 energy models, and we have saved our clients a hair over $6.5 billion through either energy engineering, cost savings, or the tax incentive side of our business. So diving a little deeper into some of the specifics here, our services, as stated, Section 179D tax deductions. This is a federal tax deduction available for commercial building owners. It is a per square foot deduction that is available for energy efficient building envelope. If specified ASHRAE standards are met, building owners can take this per square foot deduction and can be fairly lucrative from the tax strategy perspective. Section 45L is another specific part of the tax incentive business we have focused on in the past. It is a single and multifamily home per dwelling unit tax credit that is available to developers. And I'll get into a little bit of detail later on kind of some of the previous requirements for that and the changes that have occurred in the post-IRA world. Moving over to investment tax credits, or ITC, we've seen a really big influx of these coming in through kind of various client pathways, so to speak. A lot of folks are focused on, renewable energy projects, and there are a number of complexities to navigate some of the requirements to obtain, various credits that are available out there from a federal level. So we do a number of the studies and consultancy around that to kind of liaise and help clients understand how to navigate and maximize the opportunity for the incentives there. Then on the other side of the house, we do energy engineering, which is also the basis to kind of all of our energy incentive work. But we've kind of now really seen a big growth in standalone energy engineering services. So as mentioned, anything from whole building modeling, lead modeling, investment grade audits, level 1, 2, and 3, the measurement and verification that can either be on the back end of those IGAs or as an independent third party. And lastly, state and local tax. we kind of specifically dabble in state and local tax in respect to utility sales tax exemption. There are certain states in the United States that require kind of an engineering element to obtaining sales tax exemption. So we're able to help our clients be exempt from paying sales tax, typically in the manufacturing space where there's heavy spend. And again, we kind of bring that expertise to conduct the analysis required on a state level to obtain those exemptions. So moving a little deeper into the energy tax incentive space, as stated, Section 179D is, a commercial building deduction. This is something available for either owners or designers of public building projects where energy efficiency upgrades have been done, either retrofits, major retrofits, or new construction. Our process here at Walker Reid really streamlines and combines energy modeling, the whole inspection process, and the certification to maximize these deductions. And we are that third party that is required from the IRS perspective to obtain these deductions and kind of navigate the complexities of them. Section 45L tax credit. I think I'm going to kind of jump into this into a further slide here, but overall, it's really we assist residential developers in claiming it for energy efficient home constructions. Today, we will need to leverage an Energy Star certification, which we handle qualification, documentation, and filing support to kind of optimize that benefit. And then investment tax credits, right? Our team provides strategic guidance on kind of the federal investment tax credit and renewable kind of space, right? And how to liaise between the federal agencies where you're going to be obtaining those tax credits. And we also help kind of navigate the eligibility of certain clients in that space, whether it's looking at solar projects, geothermal, wind, et cetera, are not certain if they're eligible for some of these credits. So we kind of help navigate that, put studies together that kind of break down the cost and the benefit and how you'd actually go obtain the credit itself. Now I want to kind of jump into some of the
Weston, I'll jump in here a little bit too.
Absolutely.
We've these are all services we've always done, but we've seen a really substantial boom here at Walker Reid, specifically in the 24 tax year. The 179D really went. I mean, I think we 3 or 4x our, I think it was 3x our 179D practice. And there's just been this major post-Inflation Reduction Act desire to go after these incentives and utilize them. Specifically in the energy space, the ESCO space, that previously was aware of it, had been using it pretty extensively, but a lot of big players kind of jumped into this space and once it was enhanced under the Inflation Reduction Act. So, and same thing with ITC, right? The ITC has it got a huge bump to the tune of 5 times the opportunity that it previously was. So you took this base credit from being 6% to now it's a huge opportunity around at a starting point of 30% with a bunch of adders for domestic content. It depends on what area it's in. Can add an additional adder for low income housing or low income, I'm sorry, zones or opportunity zones. So it really has a lot of opportunities driving a lot of the renewable energy spending in the country right now. So, but just like everything else, I mean, these incentives and these tax legislations are complicated. There's constant shifting in guidance that's being created, added, and a lot of intricacies. So, having a good partner that really understands the intricacies around the ITC, the 179D, and the Energy Star is a whole other rabbit hole for 45L of complexities. So that those are really 45L kind of got hurt by the IRA a little bit, but now we're finally starting to see that turn a corner and designers or I'm sorry, developers be a little bit more prone to the opportunity, especially when there's the opportunity around maybe some HUD 221 financing that's requiring the prevailing wage on multifamily is kind of a nice driver and a good opportunity on that end. So I'll let you keep going. I just wanted to kind of jump in a little bit.
Yep. Yeah, appreciate it, David. Thank you. Yeah, so kind of moving into, as David just discussed and touched on, it's a good segue because when you think about the IRA, there was just such a heavy impact on the energy, incentive space, right? And all the different complexities that that introduced. So kind of jumping in the next three slides here are us discussing both the pre and more importantly, the post IRA world. So before 2023 and after, right, there were significant changes made to the requirements, the dollar amounts available, et cetera, based on, again, the changes imposed by the IRA. So this slide here specifically, we're looking at Section 179D. Legacy is what we're calling anything before 2023. Post IRA is obviously anything beyond. So previously, Section 179D, you could get up to $1.80 per square foot. There are inflation adjusters that might bring that dollar amount up a couple cents. But now in the post-IRA world, we're actually hitting a 5 times multiplier on that if certain requirements are met. So you're getting $5 per square foot plus the inflation reduction adders. So you could see anywhere up to 581, I believe, a square foot. So that's a very big difference, right? And we'll kind of discuss here in a second what's required to obtain that, but definitely a significant opportunity if you're able to meet some of the requirements to get that bonus there or that adder. So in the legacy world, there was partial qualification, so up to 60 cents a square foot per category. Examples being lighting, HVAC, building envelope. And now that is not the case. I mean, you can still get a partial deduction from 50 cents to $5 a square foot, but it's not categorical in the same way it was in the previous or legacy world. So there is a distinction there. There is no labor requirements in the legacy world. So pre-IRA, there was no labor requirements that, such as PWA that would affect the qualification and the dollar amount per square foot. But moving over to the right here in the post-IRA world, there are labor requirements for the increased benefit. So the way you're getting that 5 times multiplier is to meeting prevailing wage and apprenticeship requirements. So there is some legwork in the documentation around that and sort of making sure that you're able to present that properly in order to get the 5 times multiplier. In the legacy world, right, the government buildings were the only tax exempt entities that were able to allocate any of the energy efficient projects on those buildings to the designers of those projects, so the architects and engineers. And in the post IRA world, they expanded the kind of definition of or the allowance to all tax exempt entities, right? So beyond government, nonprofits, tribal communities, et cetera, anything that's not a taxpaying entity can allocate now that Section 179D deduction to the designers on the project. So previously in the legacy world, again, there was whole building or partial category from the analysis perspective. And now in the post-IRA world, it's a whole building analysis, right? And that is a requirement. So you can no longer use that partial system of analysis for qualification. And again, previously, the deduction was $1.80, and it was limited in the sense that it was over the life of the building. So that was kind of a limitation that was in the legacy world. And actually now in the post-IRA world, 2023 and onward, there's actually an opportunity to recertify buildings for new energy improvements. So if new capital expenditure occurs, there's an ability to recertify. In the private sector, it's every 3 years. In the tax exempt world, it's going to be every 4 years. But again, pretty massive opportunity there, considering before it was really like a lifetime certification, and now there's actually opportunity to recertify. Then lastly, the interim lighting rule available. So there was a simplified methodology for the lighting category, kind of made it a little simpler, a little easier to get that deduction in the legacy world. But post-IRA, 2023 onward, it's a little different, and there's kind of additional qualification methodologies that can be leveraged, but there's no longer kind of that simplified interim lighting rule available. So that's kind of the summary of the pre and post world for Section 179D in terms of the Inflation Reduction Act. Moving forward, we're going to take a look at Section 45L, tax credit. This specific slide looks at the pre and post IRA for multifamily. It's just an important piece to note. So in the pre-IRA world, the qualification requirements for 45L were, I'll say, simpler in many ways. So units must meet energy efficiency standards 50% higher than the 2006 IECC standards, with 10% of that coming being achieved from the building envelope. Now, in that post-IRA world, right, tax year 2023 through 12/31/2032, you're seeing that units may be certified under either Energy Star, new homes, and multifamily programs. And for an increase credit amount, you can certify for zero energy ready home programs. So if it's meeting that standard, you're going to get that increase. The height requirements differed between pre and post IRA. So pre-IRA for multifamily, buildings must be 3 stories or less to be able to receive the 45L tax credit. In the post-IRA world, there's no limitation on stories for Energy Star, limited to 5 stories or less for the ZERH. And now kind of moving into the big piece of it here and kind of what David was talking about in terms of there potentially being a slight hurt to the post-IRA 45L qualification, dollar amount and sort of attractiveness overall from a clientele perspective is that the tax credit amount, if the project meets prevailing wage requirements, in the pre-IRA world, it was $2,000 a unit. And if the tax credit amount, if it was not meeting prevailing wage, was also $2,000 a unit. But in the post-IRA world, it's no longer the case. So the tax credit amount when you are meeting prevailing wage today is $2,500 for each dwelling unit if you're Energy Star certified. And if you're able to meet the ZERH qualification, you're getting $5,000 per dwelling unit, right? If you are not meeting prevailing wage, you are seeing only $500 for Energy Star certification per unit and then $1,000 for ZERH. So again, this is kind of where, given the fact that we have to be brought on a really early stage in these projects post-IRA, right, in order to get these certifications, whether it's Energy Star or it's, ZERH, we're going to have to come in pre-drywall, multiple inspections. It's a much heavier lift. So it's just a consideration to think about from sort of an attractiveness from a tax strategy perspective. Obviously, if you're meeting prevailing wage, there's some big dollar amounts per unit that are still available. But where we're seeing certain clients hesitate, right, is if they're not meeting prevailing wage, they kind of have to do the analysis of kind of the value to them of going through that process, the cost benefit analysis there, right? And often, some clients do not find that as attractive in the post-IRA world. So with that being said, move to 45L for single family. Just for the sake of time and not to bore anyone, the single family requirements for pre and post IRA are identical. The difference being that you'll see there's no line item for prevailing wage. So with single family, no prevailing wage requirements or considerations for 45L in either the pre or post IRA world. But everything else here is really exactly the same. So no need to kind of bore anyone or go be repetitive in any sense. So now that we've kind of covered who we are, yeah, go ahead, David, if you want to hop in
I'll
there.
jump in here quickly and just big area to kind of keep in mind here is if the 45L is part of the tax strategy and it's attractive to the project, it's super important that we get involved as early as possible. And when I mean as early as possible, I'm talking about design phase or, maybe even before the design is complete, or at the first, before the construction documents are complete, and we can get like a first view of those plans and specs, because there may be some changes that need to occur and analysis that need to be run there from a feasibility perspective, and changes that could be necessary to the design to be able to qualify. So it's not like it used to be previously 2022 and whatnot. I mean, for the most part, good chunk of the projects would qualify. Moving forward here, it's a much heavier lift, like Weston said. So it's again, get us involved early and often, communicate with us often, because that's going to drive the success of this project. Especially when we look at either program, we'll have to, there's pre-construction meetings with the subcontractors that are important drivers to the success of the project. So we really become a energy consultant on the project, not so much a tax credit consultant or a specialty tax provider in this role. This really the 45L now really falls more under our energy engineering consulting practice than it does our tax practice. So
Awesome. Cool. Thank you, David, for adding some color there. So now that we've kind of discussed some of the, tax incentive side of the business, some of the, implications of the IRA to said tax incentive service lines, now we're going to move a little bit into just the energy engineering kind of overall service line, I'll call it, of Walker Reid, and talk a little bit more about this. And then we'll obviously move into case studies. But just kind of to recap, we've touched on this a bit, right? But we really offer at a high level, before getting into the three specifics mentioned here, we really offer whole building modeling, lead modeling, right? Kind of any energy engineering related modeling services is something that we offer. We've been partnering with a number of firms just doing whole building modeling for them, kind of using us as a way to augment some of the resourcing when they're really pressed for either time or tight on staff. We've been able to come in and help them meet deadlines in respect to that, as we have a pretty robust team there. Now, kind of diving into some of the specifics, a little more complexity around the energy engineering services we offer. As touched on, investment grade audits, or IGAs. For any of those that are not familiar, these are comprehensive energy audits. They provide detailed analysis around the energy consumption of an entire building, every element to that. They will also provide saving calculations and cost estimates for any of the improvements that are identified after analyzing all the different various energy consumption methods in the building. We'll come in, we'll look for areas of improvement, kind of demonstrate some of the cost savings associated to doing those improvements and the cost of the improvements themselves. And really, these reports have been very valuable for our clients for supporting capital investment decisions, right? It's kind of, where do I start if I am looking to invest in improving kind of the the energy consumption, so to speak, on various buildings, right? And most folks don't know exactly where to start there. And this is giving you a detailed breakdown, kind of understanding that. Again, it's the technical foundation for the energy performance contracts. We work with a lot of ESCOs, right, in that area, and associated project financing. So now moving to measurement and verification services, we perform these either on the back end of some of these IGAs, right? This is an annual cadence where we're going to come in and we're going to kind of rigorously track and analyze the post-implementation energy performance to ensure that the projected savings that you're going to see in something like an IGA report are actually being met. And we obviously follow IPMVP protocols to provide as transparent and third-party verified results as possible. We've seen a lot of collaboration in this space where we'll come on with an ESCO partner and perform this for, say, the contracted 5 years post implementation of the energy saving measures that have been proposed. We act as like sort of a third party in the sense that obviously every entity that's looking to propose energy saving measures wants to believe that they're going to be met. But when you bring in a third party, it kind of brings that level of assurance and confidence. We have no skin in the game, so to speak, in that respect. And that kind of just gives the end client, right? For example, right, a K through 12 school, it kind of gives them an independent view of, okay, if we came in and we partnered with an ESCO, we did HVAC replacements or control upgrades, et cetera, kind of what is the actual value we're seeing today, a year in the future, 3 years in the future, 5 years in the future. So there's been a lot of excellent collaboration and a lot of traction in that space for us recently. We've seen a huge uptick in projects in the M&V space. And then lastly, obviously, retro commissioning is something that we work with a lot of clients on. And it's more of a systematic evaluation for the optimization of existing building conditions. So it's basically to kind of restore a building to the peak performance that it could have without necessarily going the full-blown route of going down the IGA route, then implementing very cost-heavy, resource-heavy projects to improve, whatever energy measure they're looking to improve. And so, it really just identifies operational inefficiencies rather than looking for like whole system replacements. And this is just a great kind of foot in the door activity and a way for folks to kind of get a taste of how, energy engineering services can really improve the bottom line while also, improving sustainability measures at the same time. And it's typically lower cost, obviously, than a really detailed investment grade audit. Um, so I don't know, David, if you have anything to add here. Otherwise, we can definitely.
Yeah, I mean, I'm just going to mention on the M&V that there's big another benefit to the independent M&V is having somebody that's kind of outside of the box coming in, and specifically when the targets aren't being met, helping identify why and what those reasons are behind that, and looking at it from a fresh lens perspective, coming out a little bit out of the box. I think it creates a lot of opportunity there. So yeah, now if we can, yeah, so we can keep going.
Cool. All right. Yeah. I mean, that really kind of concludes the discussion around who we are, what we do. We jumped into a little bit of the tax incentive side and the energy engineering, and now kind of second half, as promised, is going to be more focused on real world examples that David's going to go through. So, with no further ado, here over to you, David.
Yeah, sounds good. Thanks, Weston. Thanks everybody for joining us again. Something we didn't mention at the beginning of the call. If you have any questions, feel free to pop them in the question and answer box, and we will jump in here. So, this particular project that we're discussing was a school district project. We were brought on via a electrician who has the contract and has been doing energy efficiency improvements around the lighting components at school district in Tennessee, and was asked to kind of, hey, can you go beyond that, and can you help us achieve some energy savings targets that the school district has as a whole. So them being an electrician and a more of a contractor, they didn't necessarily have the energy engineering background or the energy engineering staff to go and tackle this project that was a little bit different than their typical scope. So they reached out to us through our partnership with NAESCO, found us and said, hey, we need help getting this IGA. We need help on the back end because there's a requirement of M&V around the contract requirement. And in the process too, they very decent sized company, has a lot of profit. We'll want a 179D for this design work and what we're proposing here. So in this particular case, like I said, we were engaged to do the investment grade audit, the 179D tax deduction, and we were also engaged to do the M&V. It was 13 schools and one central office, over 1 million square feet between the 14 facilities, all within the education space. And Weston, if you can go to the next slide, that'd be great. So, starting with the IGA, like Weston said, we kind of go in, we come in with a fresh set of eyes, and we basically went through and identified what areas could potentially there be benefit in, and where are the weak points within the facility during the audit. We noted that during our audit that HVAC controls optimization needed improvement as far as for occupant comfort and just operational. There's a lot of operational gaps that weren't properly being used, and rooms that were being cooled when there was no occupants and whatnot. So we were a part of our recommendation in the IGA is to add HVAC control optimizations to a handful of buildings that didn't already have that. A couple of the high schools had some pretty substantial need for window replacements. There was tons of thermal loss. And the need to kind of go and enhance that insulation and improvement around the envelope. A couple of the facilities and the ball fields and football fields didn't have LEDs, so they were still using high pressure lighting and just burning a ton of of kilowatts that's just unnecessarily. So, a big, huge replacement there is going to be the opportunity to change those fixtures to LED, and they're going to see tons of savings from that opportunity. And then one that a lot of people wouldn't necessarily think of, but we went through the process, went through the facility. We set up occupancy loggers to basically identify the usage patterns within the facility. Additionally, we pulled trend data on the projects that did have BAS, and our energy engineering team kind of analyzed all those and basically determined that, in many of the hallways, closets, and other kind of low traffic, low usage area, we were able to identify, I mean, a lot of these lights are being just left on, 24 hours a day in a closet, or 24 hours a day within certain areas and hallways and whatnot, that could, just a simple lighting controls application could take care of that, and handle just, again, the biggest energy savings you're going to generate is a light that's turned off versus one that's turned on. So just the ability to control and turn off those lights was a huge factor. And then school district themselves had some desires around the UV installation on the air conditioners for indoor air quality and systems. That was something that they noted during our audit, and we basically determined that it was a good valuable opportunity, and we were able to find enough savings through the other energy improvements that we were able to identify those find the dollars to go do that UV install as well. So um, so yeah, in the opportunity here, kind of from their expectations perspective, we were able to identify an extra $250,000 in energy savings over the 16-year period, payback period that they were looking to target. So that was great. From the contractor or designer's perspective, there was huge opportunity at 179D, generating $635,000 in tax. The deduction was larger than that, but the cash value of the tax deduction was $635,000 for that particular client. And again, it was just, kind of combining a little bit of all of our expertise on one particular project, and being able to bring value to the project. Them coming in with knowing what the 179D value is on the front end really drives the opportunity for pricing, and knowing that you have that tax offset on the back end for the right type of company that can help, go drive the financials of the project, improve the ROI of the project. In this particular case, it was very, very valuable to have that information on the front end. So something a lot of you guys don't realize is we do pre-construction 179D studies on a pretty regular basis, where we come in and we analyze the building before the work gets completed. So we're coming in and we're saying, hey, if you do these improvements, now you will get XYZ tax deduction on the back end of this project. And that can help, having that understanding can really help drive, call it, the financials of the project. And then again, it was almost a solution for these guys. They needed the help around the M&V. They didn't have an M&V group or an M&V department. They're a smaller energy service company, really more of a general contractor and electrical contractor than they are GC. So the request there to have us handle the M&V on the back end of the project. So we've developed the M&V plan. We're still in construction, so it hasn't necessarily gotten through there. But once we get there, we'll be able to jump in and help with the M&V on an annual basis for them to meet their contract requirements. So Weston, if you can jump to the next slide, we can talk a little bit about a different project. So this particular project, this is one of my favorite projects. This is there's rarely that us energy engineering nerds over here get to jump on and be part of a project that really is on the upper edge of energy efficiency. There's a lot of different drivers behind this. It's a HUD 221 financing project. For those of you who don't understand what HUD 221 is, basically HUD has a program for multifamily development that allows for some pretty beneficial, interest rate terms and opportunity to lock in certain rates. A little bit of a pain of a process to get through the project, but as part of it, they offer you these attractive financial incentives to use this program, but they require a couple different things. One being you have to pay prevailing wage on the construction of the project, which really lines up very well with the 179D and the 45L tax credit. There has to be a green building certification that comes in as part of the requirements for HUD 221, which, both Energy Star and in this case, they had some corporate initiatives that they wanted to have even further and make sure that these projects were LEED certified. So really created quite a bit of opportunities on the financial side, over $5 million of benefit when we put this project together. So some of the details on the projects: 535,000 square feet, 31 story, 376 units. And again, Walker Reid kind of went through and assisted with the PWA certification, making sure that all the payroll records and all that are in compliance with prevailing wage and apprenticeship requirements. The Energy Star process, we jumped in as the Energy Star, and actually I'm saying Energy Star, but this project actually went after the Zero Energy Ready Homes program because they were incorporating solar, and added some of the Indoor Air Quality Plus benefits to help with the LEED. The A&E team, kind of saw our involvement as the consultant on the green building side and requested if, they were tasked to do the LEED, and they actually hired us to do the LEED energy models. So it kind of tags into our energy engineering division. We're already building models for this particular building for both the 179D and the 45L. And yes, I did say both. So in this particular case, because it's over 4 stories, this building has the ability to qualify for both 179D and 45L because it's multifamily, and falls under those parameters. So big opportunity there. One that some people don't realize is even an opportunity is that you can really go and do both on projects that are over 4 story now with the changes post Inflation Reduction Act. And Weston, you can jump to the next slide, please. So yeah, had the lead modeling support on this particular project, went through and were able to support the solar investment tax credit for the solar system that got installed. We got them 40% on that end. And then, again, there's a lot of opportunities around the incentive stacking, depreciation planning, with all of these improvements. So huge financial opportunity: $1.8 million in 45L tax credits, another 3.1 million 179D tax deductions, 40% federal investment tax credit on the project. So again, well over $5 million in potential benefit, and a project that really encompassed everything that Walker Reid is about, and being your determined energy partner. This is a very good example of that. So it's a lot of fun there, working on a project of this scope and stature. So if you can jump to the next slide. So this particular project was a tax exempt hospital. This was ground up construction. 179D got allocated to the A&E team. They're part of the contract was for us to help with the prevailing wage and apprenticeship requirements, and also help the hospitals take advantage of the direct pay component for the ITC on this particular project. So again, another one that was kind of a little bit loaded. It was nice. Particular case, the allocation letter was split 50-50 between the architect and engineer. Just as a reminder that you can have 179D allocated among multiple parties. So as long as they are involved in the design, that is an opportunity. And again, we collaborated with the architect engineer and the contractor to go and do all the proper prevailing wage and apprenticeship tracking for both the ITC and the Section 179D, which again is a super important component. Because this hospital system was willing to go down that path because they wanted to make sure they got the maximized opportunities around the direct pay element. So, Justin, you can jump to the next slide. So again, we got involved on this project, and it's if you're used to working with us on a post-construction end, the mind shift here is can we jump into a pre-construction environment where we're kind of more as a consultants and advisors on the front end of the project to make sure that all these different components are being met. Again, facilitating the 179D allocation on this particular project, facilitating the prevailing wage and compliance support, and then also walking through, all right, we're not a CPA firm, so we didn't go and file the return on behalf of the company, but walking through the direct pay elements around the ITC, the pre-registration process, all the forms and documentation that need to be submitted along with that. It can be confusing, right? And for some of the CPA firms on the call who may or may not have this internal expertise, some of the bigger firms, most of the bigger firms do have it, right? You can handle it. We don't need to be involved. We can only be involved on whatever pieces of the project you need us to be involved on. But for the ones who don't have it or don't have the desire to deal with it, we can be a good resource and be passed on to that tax exempt entity and say, hey, let us help you navigate this process, because most of the time they don't know how to do it. It's confusing, it's complex, it's burdensome. And there's real huge dollars behind it that we can really drive and assist with there. So this particular project, we secured $764,000 in 179D, successfully negotiated the 50-50 split between the allocation of the design team, and again, helped navigate some of the complexities around making sure the compliance around the prevailing wage apprenticeship was being met, making sure that only the opportunities or the what's it called? Only the components that were relevant to the project needed to meet the prevailing wage and apprenticeship requirements. So that entire analysis was all done by our firm. So all right, let's go to the last case study here, and then hopefully we'll finish a little bit early for you guys, and everybody can kind of get on with their day. We really appreciate everyone's time here today. So this particular project, a hotel came to us and basically said, hey, we want some help on the energy engineering side, and then we'd like to make sure we can get the benefiting tax credits and tax deductions on the back end of this particular project. So we went through, performed the IGA. We're able to secure $874,000 tax deduction, 179D for them on 163,000 square feet. Again, without this one, they didn't want to. I'm sorry, they didn't want to go through the prevailing wage, so they chose to go with the lower deduction amount of 174. And then again, one of the big things is we came through and we identified all the areas and the gaps of on the IGA from an operational savings perspective. So Weston, if you can jump to the next slide. Great. So yeah, in this particular case, we had the 179D eligibility. I'm sorry, we did do the prevailing wage and compliance and review on this particular project. I was thinking of a different hotel project we worked on. This particular project, we also assisted with the PWA, and helped on the investment grade audit. Really found quite more around the HVAC controls opportunities for the hotels. Lighting isn't a major factor for the most part, and they had already pretty much retrofitted the facility with LEDs throughout the years. But the adding of the control system to the HVAC it really helps with having proper occupancy when rooms are unoccupied, having the proper set points and whatnot. So we all did that as part of the IGA. The particular project had a geothermal system that was incorporated, and we helped on the ITC end there to go capture that credit and determine those incentives. So again, another example of kind of a multi-prong approach around using Section 17ID, using energy engineering as a value add and driver of those incentives and achieving the support around the ITC and opportunities there. So particular project had $700,000 increase from bringing it up from 174,000 to 874,000 because of the PWA compliance and again four million total dollars in benefit with when you include the ITC opportunity as well. So, and the energy savings. So, again, pretty substantial, pretty significant opportunity there for us as well. So, I guess at this point, see if there's any questions.
Yeah, David, there is actually a question I see. Let me see if I can pull this up. Here's a question we've got. Have you seen cases where the 179D was leveraged to buy down a project by passing it through to an implementation company?
Yeah. So, that's actually been a very popular way of using the 179D. Before the Inflation Reduction Act, I would say some of the energy companies were actually going to the subcontractors who are implementing the project and saying, hey, there's a 179D here. We're not necessarily interested in taking that 179D as a corporation, but will you, Mr. Lighting Contractor, Mr. HVAC contractor, be involved in the design and go ahead and take it. So for in the case where larger companies may not have the need or tax appetite for it, we are seeing them create programs around having the passing on some of those energy savings back via the implementers of the energy efficiency systems around lighting, HVAC controls, and whatnot. So it's definitely an area that we've been seeing more on. Additionally, more recently, a lot of the ESCOs have been using this as a strategy, to go and buy down projects a little bit and reduce the cost. So, yeah, no, great question. Definitely an area that we've been seeing a ton of movement on. And again, I think it kind of goes through uh, what's it called? Going through the opportunities there of potentially um I lost my train of thought, but it really creates a lot of opportunity for cost savings and increasing ROI, and the true spirit of the use of the Section 179D, where historically before the IRA, it really wasn't being used that way, but now we're seeing a bigger trend in that direction. So.
Yeah, there's actually another question, which is great. Keep them coming, guys. We got time. Another question here. Part of your offering is also industrial tax incentives. Will there be a webinar discussing industrial tax incentives and client examples? I'll start with, I believe you're talking about, like I had mentioned, some of the utility sales tax exemption or general sales tax exemption opportunities in kind of the manufacturing or industrial space. I could be misunderstanding that, but the answer is David and I probably need to think about doing that for sure. Maybe doing something special along those lines. We've just been busy tax season, et cetera. But the
Yeah,
answer
it
is
might
maybe.
be better to jump on a call offline, and if you have specific questions, it might be better to answer them in that fashion as a lot. I mean, look, there's a lot of opportunities around the utility tax exemptions. There's also opportunities like Weston, we've been working on that project on the CHP project with the central facility where they're wanting us to analyze the efficiency of the plant at the city. So there's definitely some opportunities there and some examples, and we can definitely assist with that. So if you want, maybe we can schedule something offline to really dive deeper into that topic with you, because I don't think we have, kind of just looking at our upcoming webinar dockets, I don't think we we have anything on the schedule specifically around industrial.
Yeah, the answer is not currently scheduled. And like I said, maybe David and I one day down the road will do that, but we just have so many webinars scheduled right now throughout almost the end of the year. But definitely reach out to us directly if you're interested. We can definitely talk through a number of incentives available in the industrial space. Let's see. Any other questions, folks, before we wrap up?
No, it doesn't look like it. Yeah, I mean, here's our contact information. If you have any question, please jot it down. Feel free to shoot us an email. Weston or I are both extremely responsive. We should be able to get back to you in a short period of time. And looking forward to working with you all. And if again, supporting you. If you have any questions come up, happy to be your bouncing board as you go and develop projects, or if you have any appetites around tax incentives and whatnot. So
Cool. Awesome. Thank you all for joining today. We appreciate your time. Please reach out with any questions.
awesome. Thank you.
Thank you.